Hey, hi everybody, Russell Moore coming to you live, dedicated to financial literacy. I'm back, yep. The holiday, the Memorial Day holiday. Give it up for all armed forces, armed services. What's up, Marines? Oh yeah! What's up, Marines? Anyway, I'm going to do part 3 today of I want to invest, but I don't know what I don't know anything about it. That's basically what I've been entitling it, and I entitled it that way because there's a lot of people in that kind of situation where they want to invest in the stock market, but they're afraid to. And some people think I got to have all this money. I got to have a lot of money to start. And I don't know where that lie has come from. I'm gonna call it what it is. It's a lie. You can start. Now, I will say this. I don't advise people to start if you have a lot of debt. I would say clear your debt out first. The other thing is number one, clear debt, get out of debt before you do any you might can do some light investing, but I wouldn't do it. It's basically, to me, you're getting the cart before the horse. Clear your debt. Get all your debt dealt with. Attack your debt. I've been saying that all year. And then start investing. And then the other thing is, make sure that your income exceeds your expenses. If your expenses are up here and your income is here, that means you're living from paycheck to paycheck and you're basically juggling. No. So if you have to get an extra job, a little part-time job on the side, just to get your income above your expenses, see, now you got some room. You can take that extra. Your bills are being paid because you're up here. Your expenses are down here. So all your expenses are paid. Everything above that is gravy. So now you can take the gravy and put it into and invest that. And that's where I think some people, particularly middle class, my people, I love you, but that's a mistake that's made, is that their expenses are exceeding their income and they're trying to invest. You're going to eventually start dipping into your profits. I'm telling you from experience. That's what I did in the beginning. So, okay, don't do that. Clear debt, number one. Number two, make sure that your expenses are, there I go again. Calm down, Russell. Make sure your income is exceeding, it's more than your expenses. All right, so today what I want to do about. Obviously, I haven't been on in a few days, all right? So love me, okay? Love me through this part. I thought what I'd do is, I did this kind of in part 1, but I thought I'd be a little bit more organized. I wrote down a bunch of definitions, and this is for beginners. If you're not a beginning investor, this is going to be boring to you. But I think this will help if the newbies get some definitions of, what are the stock terms. And I've done this. I have some that I've done in the past, but I think once a year this needs to be done, just to remind people. And then you get new investors that don't want to go back and look at your videos. They see something new and they just want to see that. So I'm going to do this pretty much every year. Now, I am not going to do every single word. There's so many words and terms that you can use to describe the stock market and this whole area, okay? I'm not going to do that. I'm going to do the ones that I circled the ones that I thought that were important, really important if you're just starting. And some of these still won't be that important to you just yet. You're just trying to get started, okay? So the last video I mentioned starting an account, Webull, Robinhood. And I use those platforms because they're simple and they're brokerage, discount brokerage firms. And they're simple, they're user friendly. You can trade stocks right from your phone. Pretty much you can do that from any any platform now. But I'm just saying that they're user friendly, and it's a good place to start. I have a Robinhood. I got Robinhood only because I just wanted to see how the platform works. So one of the things that I might do is start from scratch so people can actually see, because I realize, sometimes people, they need to see what you're doing. And so what I may try to do is, I'm going to do this, and that is, I'm going to start an account, and I'm going to act like I'm just starting. I'm a new investor. I don't have much money, and I'm going to open up a Robinhood account, and I'm going to fund it, and then we're going to buy stocks, and we're just going to follow it for 6 months. If not every day, every other day, I'll come and we'll look at the portfolio. We'll look at it. We'll look at that account. I'll open up a new account just for that, just for the teaching, and so people can actually see and they can walk through it. I'm not telling you to mimic what I do. Okay? I'm not telling you to do that. But it would be good if they could see somebody actually trading and what's my mindset and how what's my strategy. And okay? How about that? What do you think? All right. I'm already in 6 minutes deep. So let me just go over some definitions. What I'm going to do, I'm probably going to do about 10, 15, maybe 20, and then I'll come back and do another portion with more words. All right. The first thing, the first word, well, it's not really a word. It's a financial report. It's the 10K. 10K is an annual report. Now, this is good because you hear me talk a lot about financial fundamental analyzing. Fundamental analyzing, it involves you looking at the actual numbers of a company. And one of the greatest ways you can look at the numbers of a company and how they're doing financially is through the 10K. The 10K is the annual financial report, and it's required of all public traded companies. Any traded company, it's required that through the SEC, and we talked about the SEC, Securities Exchange Commission, they have to file these reports. There's got to be some transparency, because that's going to affect us. What if a company's going broke and there's no transparency? So here you are buying more shares and they're going broke. They're about to go bankrupt. So one of the purposes of having a 10K public is that there's transparency about that company. And then there's a 10Q. 10Q is the quarterly. Same report, but it's a quarterly one. Quarterly meaning every 3 months. So whenever you hear me say quarterly, it's every 3 months. There's 4 quarters in a year. Gotcha? I know many of you already know this, but this is good for the newbies. Remember, my channel's for the newbies. 10K, 10Q. All right? 10K is what? Annual financial report. 10Q is the quarterly. All right. I'm going to go kind of like in alphabetical order with these definitions, okay, with these terms or definitions. The first one is ask price. The ask price. It's usually the price that somebody who's buying a stock is willing to accept. So this is when you hear the term asking price, it's the person is buying the stock. Remember, the market, your buyers and sellers. Well, the buyer is saying, this is what I'm willing to pay. That's the asking price. The bidding price, which is the next one, is for the seller. The seller said, this is what I'm willing to sell it for. That's pretty simple. Ask, this is what I want to buy it for. Bid, this is what I'm willing to sell it for. Does that make sense? Okay. I went over bond, but I think maybe a bond, boy, I wrote this. An IOU issued by the government. Yeah, basically it's an IOU issued by the government, or it's a private enterprise. And bondholders are the buyers. So if you're a bondholder, you're the buyer of the bonds. So basically it's an IOU. The government says, look, I'll give you a bond. I'm going to give you interest for it. I'm going to give you interest. I'm going to pay you interest on this bond. and you're going to loan me money. You're going to give me cash. I'm going to give you a bond. And then there's maturity levels, okay? There's maturity levels on those bonds. There's three types. There's T-bills, T-notes, and T-bonds. T-bonds, 10 years to 30 years. T-notes, 2 to 10 years. And T-bills usually are around between 1 and 6 months, 1 and a year I'd say. Okay? All right. Bubble. Whenever you hear the term bubble, it's when the price of stocks or other securities gets inflated. Like you heard of the housing bubble in 2007. You heard of the dot-com bubble. Usually it's when a group, a herd, you're going to hear that term sometimes, a herd. That means a group, a massive group is going in the same direction concerning a stock or a security. So the herd is coming and they're buying all of this stuff. And what happens, that market will inflate at one point. And many times it's not due to fundamental analytics where there's been good research. It's usually everybody heard about this stock and they start following it. Don't be a follower. Be a leader. You can be a leader. What do I always say? Hey, if you don't read, you won't lead. Tomorrow's leaders are today's readers. And if you don't learn, you won't earn. Tomorrow's earners are today's learners. All right. The next word I got circled here that I wrote is capital gain. Capital gain is basically, when you hear capital gain, that's the profit. Basically, it's your profit. After you sold a stock or an asset, your profit is called the capital gain. Cost basis. We're already at C. Cost basis. It's the original cost that you paid. So say you bought a stock at $3 and Honest. We'll just pick Honest, the Honest Company, and you paid $3.60 per share. Okay, and then it goes up to $5. Your cost basis is the $3.60. That's your cost basis. That's your original price of what you paid for that stock. Okay, so that's the cost basis. All right, where's my next word? Dividend. I think I went over this. A dividend is when a company divvies out profits. They usually do it quarterly, semi-annually, or annually. They'll divvy out the profits. And it doesn't matter whether the stock depreciates or ascends. Doesn't matter. Okay, if they give a dividend, now if that company begins to go under, they may sometimes reduce or remove the dividend. Okay, dividend is gravy. A company does not have to do it. It's not mandatory, okay? They decided, hey, we want to reward, we've been profiting, we want to reward our investors, and then they bring you in and say, hey, and here's a good thing. Just a retail investor, which is what we are. Okay? You got the institutional, I talked about this, institutional investor, those are the big boys, Wall Street, all right? Everyday people are retail investors. That's a good definition to remember. So, okay, but retail investors can get dividends as well. All right, earnings per share, EPS. The total company profit divided by the total of outstanding shares. Okay, I'm going to say that again by writing. Total company profit divided by the total outstanding shares. So the total company profit is divided. So it's whatever the profit is divided. It's divided by the number of shares, and that'll get you your EPS. All right. ETF, exchange traded fund. The exchange traded fund is a pre-diversified tradable security or a stock, and but it's not like, because some people say, well, what's the difference between a mutual fund and an ETF, an exchange traded fund? The thing about an ETF, it actually moves like a stock. Daily, it'll go up and down and up and down. That's one of the differences between an ETF and a mutual fund. A mutual fund is a basket. It's shares that are divided up. Okay? Shares that are divided. And so an ETF, and that's what I usually encourage young, new investors, get you an ETF. What you can, the great thing about ETF, it'll have, you can get one that deals only with a sector. For example, the tech sector. It has Microsoft in it. It'll have Dell. It'll have Amazon, Google. It'll have all these good, notable stocks, solid. You purchase that and you just put it on recurring, where you're just buying it. You're buying it every payday. $25, $30, $50, $100, and just let it build. That ETF for the tech stocks is not going anywhere. It's solid companies, okay? That's ETF. Fundamental analysts. It's analyzing a stock or a company based on its fundamentals, its financials. Does it have a moat? Is it profiting? Is it how's the revenue? How are their expenses? Do they have cash flow? Do they have a lot of debt? How's the executive team, the CEO? You're looking at the company and finding out if it's valuable or not. Is it worth you investing in? And you should do that before you invest in any stock. Don't just go and buy a stock because Uncle Boo Boo said buy it. You go find out if that company is really on the up and up. All right? Okay. I'm going to do a few more. I'm at 16 minutes, so I'm going to do a few more. And then I'll come back and do a part 4. Let's see. Inflation. Inflation is a decline of a currency's purchasing power. Because we hear that all the time. And it's more than this. It's more than what I'm saying. I'm just giving a new investor, because you're going to hear that. You hear that word all the time thrown out. Inflation. It's basically when your money loses its purchasing power. Let me give you an example. You go to the store and you buy some Honest diapers on June 1st, and they're $17.70. You come back a month later, July 1st, and you buy them, and now they're $20.70. They've went up $3. Okay? Now, inflation means you can't take the $17 that you used on June 1st and purchase those same diapers. That's inflation. It's inflated. Now, some people, there's a different meaning for inflation, meaning it constrains, the economy constrains. But we're not going to go into all of that, okay? We'll talk about economics, the economy, and economics later. All right, so inflation, initial public offering, that's the next word. It's when a company goes public. They put their shares out. They say, hey, we're going public now. We're making it available to the public to buy shares of our company and become owners. Because remember, when you're a shareholder of a company, you buy shares for any company, you become an owner. All right. Let's see. Do I do one more? I think I'll stop there. And I'll come back and we'll do this again. Okay, and I'll give you some more words. And what you can do is you can either write them down. What I can do is probably put this list in the comments section somewhere. And put the definitions in there for you, or create something for everybody. That way you can have them yourself. And, okay? I want to thank you for watching. Be sure to hit the subscribe button. Be sure to hit the notify bell. And so you can get more content in the future. Love you guys. I pray that your finances would be blessed. And I continue to rebuke the spirit of poverty, lack, and debt. And I pray for wisdom. Everybody will have wisdom with their finances. Wisdom for the remaining of the year. They'll be able to navigate through the tariffs and all the inflation and all of that. There is no inflation in heaven. There is no tariffs in heaven. God is our source. And He's a great God. Be diligent at your job. I pray that they'll be diligent on their job. Do a great job. And I come against any layoffs. Anybody that's been laid off, I pray for a brand new job, making more money than they did before. In Jesus' name, amen. Love you guys. Hang in there.